Where should you invest your money in 2022? Now, this is a question a lot of you must be wondering over right now. And this month is extremely critical because this is the month when the appraisals will happen, your bonuses will start coming out soon. And this is a normal question in terms of where should you invest your money. Now, the reason the situation is a little complex right now is because of the war that's happening. There is uncertainty on the oil prices. There is a wave of inflation that's happening across the world. So, you're not sure how the asset classes are going to behave. Now, in this video, I'm going to go through each of the major asset classes and give you a narrative in terms of whether you should consider investing in those asset classes in 2022 or you should ignore them for now. My name is Sandeep Das. I am an MBA from IIM Bangalore and I have a strategy course from INSEAD. I have nearly 12 years of leadership experience across FMCG and consulting. I'm the author of 3 successful books, including Hacks for Life and Career, a Millennial's Guide to Making It Big. Before we start, you can always connect with me on LinkedIn. If you have questions about any of my commentary, you can reach out to me on LinkedIn. I'll try and answer as many questions as I can. You can also subscribe to my channel to get access to more such videos. So let's get started. The first asset class let's discuss is PF, PPF, and NPS. So should you consider these asset classes in 2022? And my answer is an absolute yes. You should definitely consider these asset classes, and let's take a quick glance at them. So public provident fund, you can invest up to $1.5 lakh in a year at 7.1%, and that is completely interest tax free. It's backed by the government of India. You should definitely invest. It's beating inflation. It's a fixed return. So honestly, it's a no-brainer. The provident fund, which is in your company, also you should consider very strongly. It's 8.1% fixed return this year, although there is a tax component and it might come down to around 7%, but it still beats inflation, which is fairly secure in terms of the earnings. So you should definitely opt for the provident fund. If possible, you should contribute more to the provident fund through the voluntary provident fund, which also gets you the same interest rate of 8.1%, and after a tax it comes to roughly 7%. I do believe national pension scheme, in which you can invest at least 50,000 to get a tax benefit, is an excellent long-term vehicle to build a retirement corpus. So PF, PPF, NPS in my view are absolute yes for considering for investment in 2022. Let's look at the second asset class. The second asset class we will consider are debt funds and fixed deposits. So should you invest in debt funds this year? My answer is actually not this year. You should give it a skip this year. And the reason for that is very simple. So for most debt funds, if you look at the yields to maturity, which means if you buy it right now and hold to maturity, how much can you earn? That yield to maturity is between 4.5% to 6%. And all of them are taxable. So after tax, even if you hold them to the right amount, you will get about a return of 4 to 5%, which doesn't beat inflation, honestly. And the bigger concern is across the world, as inflation rises, all the central banks are likely to increase interest rates. And some of you might be familiar that when interest rates go up, bond prices or debt fund prices will start going down, so the returns will take a hit, might go lower than the 4-5% number. So in my view, you should probably avoid debt funds this year. What about fixed deposits? The answer is maybe. It depends on the situation. When do you typically consider fixed deposits? So fixed deposits, you'll get between 5 to 6%. After tax, maybe it'll come to 4 to 4.5%. But if you have a big event coming in 6 months in your life or your 12 months in your life, a big event could be a higher education, a marriage, you're planning to buy a flat, or even a planned vacation. If you are looking for a big event that's coming your way, then you can consider a fixed deposit so that you monetize your investment right now and keep it in a safe haven for now. Let's move to the third asset class, which is something you're all interested in, which is the stock market. So let's talk about the stock markets in some detail. So as I'm shooting this video right now, the BSE is almost touching 60,000 and has a PE of over 25. So just to give you that into perspective, if you look at all the markets in the world, all the emerging countries in the world, the Indian market is currently the most valued overvalued and as the highest premium right now. So given this, what are the complications? There is a complication because of oil price, because of the higher oil prices and the unpredictability around it. India imports nearly 80% of its oil. What will happen is a lot of companies, their input costs will start going up. As inflation rises, there will be a demand slowdown. If you see the FMCG results, there is a slowdown that's happening in the rural areas. So there is a bit of cloud over the share market results. So where should you consider and where should you ignore? So let's start with the large cap. Let's start with the big companies. Should you invest in them? My answer is yes, but only if you want to hold on to them for at least 5 years. If you give 5 to 7 years to a good large cap fund, HDFC, Reliance, TCS, Infosys, you are likely to see a handsome return. What about mid cap and small cap funds? My answer is you should probably let it go this year. Valuations are through the roof right now, and when the environment, whether it's oil price or inflation, turns negative, the mid caps and the small caps struggle a little more. So you should avoid the mid caps and the small caps for now. What about tech based IPOs? So in my view, absolute no. You should completely ignore them for now. They come with a lot of hype, they come with a lot of hoopla, but unless these firms are profitable or have a path to profitability in the next 2 years, you should completely ignore them. There are so many examples in the last 2 years of a firm that listed and lost 70% of its value in 1 year. So tech-based IPOs is a strict no-no unless you can see a clear path to profitability in 18 to 24 months. What about the American stock markets? I have always been a big fan of the American stock markets. It gives you access to themes which you don't get in India, and the long-term prospects of the American economy are very, very strong. But you need to hold it for some time. So if you're ready to hold it for 5 to 7 years, the American stock market is a big yes. What about the Chinese stock market? And the Chinese stock market is a little interesting, to be honest. So I wouldn't recommend it, and here are the following reasons. One, the economy is slowing down. If you see, they are having a very harsh COVID policy, places like Shanghai. There is a very strong clampdown on tech companies, on edtech companies. Also, there is a lot of constraint with the real estate sector. You would have heard about Evergrande defaulting on its debt and similar real estate companies. So the Chinese economy is not in the greatest of place right now, and probably you should ignore the Chinese market for now. So that's how you typically navigate the Indian share market. The fourth asset class I want to look at is in terms of real estate. And if you're looking at real estate, my take is very simple. If you're looking to invest in real estate, I never believe it's a good idea because it's a huge investment, it's illiquid, and the rent, it's something called rental yield. The rent you will make basis the property value is always 1 to 1.5% at best, and that's never good enough because it doesn't beat inflation. So for investment, real estate is not a good idea in 2022. If you want to buy a flat, if you want to buy a place for you, for your family, then it's a good time because interest rates are low, so your home loan EMIs will be affordable. Buyers are giving great discounts. Economy is coming back. Your bonuses are likely to be good, so you might want to consider real estate for staying, not for the purpose of investing. The last asset class we will consider is all the exotic instruments, all the virtual digital assets. So let's talk about crypto, let's talk about NFTs, let's talk about P2P lending. Should you invest in any of these? It depends on you, honestly. I am someone who is a little risk averse and very conservative in the way I invest. So I will invest only if the government has a clear policy. The government doesn't have a clear policy on crypto, so I will let it go for now. Similarly with NFTs and similarly with P2P lending. But if you are more risk taking, please go ahead. But my advice would be do not put more than 5% of your savings into these exotic assets. You really don't know which way they are headed. If I were you, I would probably not invest in them this year. The final question is, should you invest in gold? I do believe 5% of your portfolio should always be in gold because during uncertain times like these, gold prices should generally do well. Also, it's a great hedge in your portfolio to have. But do not buy jewelry because you will lose money on wastage. Do not buy biscuits. You need a place to keep them. Buy gold bonds. You can buy them online. It's a fairly decent return instrument. Now, if you want to learn about any of these asset classes or any of these personal finance questions, you can look at specific courses which are run by Inside IM as part of its Alt Uni University. The link to that is the description below. So with this, we come to the end of this video. in terms of where you should invest money in 2022 and where you should give it a skip. If you have any questions, you can connect with me on LinkedIn, drop in your comments there. I will try and respond to as many as I can. Till next time, take care.